HDB interest rate is 2.6%.
Yet they go for HDB loan.
Yeah, they still go for HDB loan.
Repricing or refinancing both serve a common objective. We are covering two questions. One is HDB or bank loans better?
Yes.
And what's the difference between repricing and refinancing?
Yeah. So when choosing financing to buy a HDB flat, you will basically have two choices.
Right.
One of them will be taking a loan directly from HDB, or what we call the HDB loan, or taking a bank loan, which is taking a loan from a financial institution. Now, the rules are different for these two particular kind of loans. So I'll just like to start off with the HDB loan in the first place.
HDB rate is about 2.6%.
Yes.
Much higher than the current bank rates, which is between 1.2 to 1.4%.
Now that you're aware of the interest rate for these kind of two different kind of financing, we'll get straight to the reasons why people know that HDB interest rate is 2.6%.
Yet they go for HDB loan.
Yeah, they still go for HDB loan. Okay.
Right.
Now, the first one is the loan to value ratio. So the loan to value ratio for HDB is up to 90%.
Right.
Whereas for a bank loan, it is up to 75%.
Yes.
Meaning to say, in the market right now, the highest amount of loan you can get for residential development is 90% from HDB. Now, this is very helpful and very useful, especially for people who are a little bit cash tight.
Although HDB can loan up to 90%, there's one catch. You must wipe out your CPF OA, ordinary account first, then they'll lend you up to 90%.
And also bear in mind that assuming you're eligible for a second HDB loan,
Right. Qualified Singaporean can take maximum 2 HDB loans.
yes, 2 HDB loans. Okay. Now, if you choose to take a second HDB loan, right, you need to actually set aside half of the cash proceeds from the first house that you sold.
That's right.
Meaning to say, for buyers who actually want to be able to keep all the cash proceeds from the first house that they sold, then maybe HDB loan would not be such a viable option for you. Maybe you would want to go for bank loan for the second purchase.
To make full use of your HDB loans, most buyers will tend to buy a bigger HDB first for their first loan.
Yes.
Then the second loan will be smaller. So go for the bigger HDB flat if possible for your first loan. Yeah.
Yes. Third consideration, Dennis, can I say, would be the down payment required.
That's right.
Because as we have touched on earlier, when you choose to take a HDB loan, conceivably, if the criteria is right, you do not come up with any cash down payment except for the initial cash deposit.
Right.
When you are able to loan up to 90%, it also means that for the remaining 10%, you can use CPF for that.
Yes.
Meaning to say, if the house have actually got no what we call COV, you actually don't pay any cash for this purchase.
Right.
But if you choose to go with a bank loan, because take in mind that the ratio is up to 75%, 20% is covered by CPF.
Yes.
But 5%, this 5%,
Compulsory 5%.
compulsory
cash.
must be cash.
That's right.
So for people who can maybe afford that little bit more of cash, they'll go for the bank loan actually.
Right. So for buyers who are CPF rich but they're tight on cash,
Yes.
they'll go for HDB loans.
Yes, naturally.
Yeah, although the rate is higher, but because they don't have that much cash.
So this is something that you have to take note of actually. Do your due diligence, work out your finances. If you feel like that 5% cash is a bit too much of a stretch, and if you qualify for the HDB loan, then go for the HDB loan.
Point number 4, contract terms. These contract terms is also more favorable towards HDB loan because one thing about HDB loan is that there's no lock-in period. There's also no penalty for early repayment. Because in a way, HDB is still a government body.
Yes.
Unlike the commercial banks where they are profit driven. So if you sign up with a bank for a lock-in period for 2 or 3 years and you pay early, there'll be a penalties between 1 to 1.5% depending on which bank itself. Yeah.
And some people classify this as what they call clawback, right, Dennis?
Clawback, right.
Clawback for certain bankers, they will use that term actually. Now, important tip for you guys to know is that when you are on an existing HDB loan package and you want to switch to a bank loan, you may choose to do so.
A lot of people actually do that.
A lot of people actually do that.
Yeah.
In fact, I am on a HDB loan package, so I'm considering to go to a private bank package at the moment.
So this is a money saving tips. So if you assuming you are qualified, go for the HDB loan first and later convert to a
private bank loan.
Yeah.
But do keep in mind that if you're on a private bank loan, you cannot convert it into a HDB loan package. So it only works from HDB loan to private, but never the other way around.
Yeah, so make the best use of your privilege.
If you are still uncertain or unsure which loan packages to go about or how to actually go about doing your financing or your calculation, feel free to call us at any time,
Right.
and we'll be able to give you the right and proper advice.
Right.
Alright.
So that brings us to repricing versus refinancing, because I think this question is also linked to this home loan issue.
I hear this repricing and refinancing all the time, Dennis. Maybe you can explain to me what repricing actually means?
In layman terms, repricing or refinancing, they both serve a common objective, is to find the cheaper bank rates.
Yes.
For repricing, it's simply sticking to the same bank. That means you don't change bank, but you ask your bank for a lower package, more attractive package that's likely to be lower than now.
Yes.
Yeah, so that's repricing. For repricing, it's much simpler because you're sticking to the same banks. There'll be no reassessment fees, like you do not have to do a home valuations. You do not have to reassess your income. So it's much more simpler. Yeah. So in my opinion, if the current bank rate is good, stick to the same bank so that there'll be less legal fees, admin fees. Versus refinancing is basically to change bank, because you're now, let's say you're with bank A for this package, and you found a bank B which has much lower interest rate. So you think, hey, why don't I switch over to the bank B? Then this is called refinancing. Both serve the purpose of trying to bring down your interest rate payments, but refinancing means that there's a better bank, because the bank is new, you're new to the bank, they need to do your income assessment, more paperwork. As an estimate, the legal and valuation fees will likely be more than $2,000. Yeah.
So there are a few tips we would like to share with the audience. So the biggest tip is actually only do this repricing or refinancing only if the latest updated interest rate makes sense. So there has to be savings after you've done your calculation. If not, why even bother to reprice or refinance,
reprice
right?
or refinance only when the saving is more than the cost.
Yes.
If you're still confused, let me give you a tips or a guide. If your loan is about 2 to 3 years back, there's a good chance that you can reprice or refinance, because now interest rate is much lower than 2 or 3 years back.
Yes, definitely.
Now it's about 1.x percentage. It's quite low. So do make the call, make effort, make a call to your bank, ask them, hey, what's the current best rate and what's your current rate? If there's a difference, then ask question number 2, what are there any lock-in period for your package, and what are the penalties if I do a repricing or refinancing? So ask all these questions, right? Like this phone call will save you potentially hundreds or thousands of dollars.
Because what a lot of people don't realize is that they just let their loans just run as per normal. They are so used to seeing that, but sometimes they may not realize that, hey, there's money to be saved here, you know. If I just make a simple phone call and do a little reassessment here and there, right, potentially every month I can save maybe $150 or $200.
Trust me, this phone call will save you a few $1,000.
So always be updated on the latest interest rates.
So if any questions, just give us a call. So
just give us a call.
one-to-one in detail.
Sure.
Right. Thank you.
Thank
See you in the next video.
See you in the next video.
Right.